Yo, what's going on, everybody? It's been a while. It is the Jew and the Brown Man here with another episode of SLTV. What has it been, like 2 months even? I think it's been like 2 months since you and I got together. There's been a lot going on. There's a lot to talk about. First, I say we begin here with a thesis on where we think the market is going, and then we'll get into ranting on some topics. I personally think we're not going to dip here for the rest of the year, man. Where you at?
I'm with you. I think we got everything that we needed to fuel this market based on shorts getting their asses kicked.
Right. And dude, you know what I've been looking at is the VIX, man, is when how the VIX is trading. And even that last dip that we got, which was only the beginning of this week and last week, VIX barely even moved, right? I mean, we barely got to move up on the VIX. So we barely got to move up on the VIX ETFs. I think the VIX got to what, 21, something like that, 21,
Right.
20 bucks. So the level of fear that we get here on these pullbacks now is not even close, not even anywhere close to the panic selling that we saw when your beloved UVXY went to the fucking moon.
Yep, and that was just because, I don't know, what's crazy about that move in particular was that we were concerned about the China slowdown. We didn't even get a chance to see if China was slowing down before we were convinced it wasn't slowing down anymore, and we're already back to all-time highs. So what was that all about? You know, it's amazing how every sell-off, they have these it's a great thesis at the time, and it always pans out to be wrong.
Yeah, and further on that topic, you remember how the Chinese stocks were all, I think it was even last time that we even spoke, right? China stocks were all like just being gutted out left and right. And now all of a sudden you have Baidu back up to like almost $210. You have people buying Alibaba again, right? I'm seeing options. By the way, I'm seeing call options go off for 90s, for 100s, all the way out into mid next year for these beat down sort of China names that we thought were just going to shit completely.
Yeah, because again, there's nothing like fuel of the dying people that are short the market to make the market go higher and higher. It really is. Once you have that chance to cover and you get greedy, and next thing you know, I hate the saying trapped, because you're never really trapped in a trade, but people feel trapped.
Oh, no. Oh, come on, man. Let's be real. Like, people get trapped, especially on the short side in this market. And that is what happens. That is what fuels the next long moves. You know, that's what fuels the buy the dip trades. And people do get trapped. And that feeling of trapped is like you can't get out, or you can only get out at that last second before you die, that kind of thing. And we see it every time on these SPY squeezes. Who are the ones that are fueling most of the rally here? It's the shorts that get stuck every step of the way, during all these pullbacks here. So I mean, what are we buying here? What are we buying here into the next year? Where do we think the rotation is? And then I got a whole list of shit to rant about. Guys, interact with us on Twitter. Hit us up at Hit the Bid Radio at Sang Lucci. Ask us any questions you want. We're going to be here for a while. So what are you parking your money in? Let's start with that topic and then roll into everything else. I got financials, man. I got financials. I'm working the shit out of this Bank of America, man. Yeah, I am working the shit out of this Bank of America. Let me tell you how much I am working the shit out of it. I already got like 100 grand in the May 20 calls right now. I'm adding into December's. I'm adding into February's here. I'm adding into January's. And for 2 years, guys, Bank of America has not done shit over that $18 off that $18 sort of resistance. And, if it's clear here that whatever the reason is, rates going up or down or whatever the hell it is, if there's buyers here through that 18, I think we're going to shoot up to 19.5 real quick. Kill all the stops that are probably sitting at 18. And we might see $20 real fast. So I want that move. I want to be loaded. I want to be levered to the fucking hilt if that happens. Before that happens, all right? And that's like my trade, I think, for the next 6 months, man. What you got, Kenny?
No, I like the Bank of America trade. I've been taking the conservative way, I guess you could call it. I haven't bought QQQ calls back because this all happened in 2 days, but right. I was selling premium, because I think the August lows, before even we sold off last week, you know, and before the terror attacks, I thought the August lows are going to be generational lows on the
generational lows. So you're talking year type shit.
Yeah, I don't think we're going back below 84 ever. And then that 94 area where we pulled back to, that's your launching pad. So I started selling puts on the Qs. You know, obviously selling puts, you're looking for the stock not to go down. You're a seller.
Yes.
So I'm selling anything under 95, just taking in, you know, I'm out till March now. I sold, what did I sell? You know, March 95s. I sold some March 100s. You know, you still get some decent premium because obviously there's people still thinking that the market could actually go down.
Yep.
But it's a losing game. It really is a losing game.
Right. Right. All right. So let's move on to a bunch of topics here that we want to cover here. Well, obviously, we haven't seen you guys in a while. A lot of shit is happening. I think the biggest thing that is out there right now that is, you know, top of the headlines every single day is Valeant Pharmaceuticals. Valeant Pharmaceuticals. Apparently today, news came out that they're offering stock and cash to a lot of executives who they're afraid will leave. After, you know, seeing all the scrutiny that's happening in that particular stock. Guys, VRX, if you've been living under a fucking rock for the last, since 2 months or last month even? This just started, last month. Stock absolutely imploded from about 220 bucks. Now it's trading about $72. And so far, the course of, you know, the last couple of weeks, Ackman has come out. Ackman is a big investor in Valeant Pharmaceuticals, along with a lot of other funds. A lot of people have come out and, you know, in defense of the company. Citron Research is now exploded to like the, you know, to the upper echelon of analysts. And you know, just for blowing out this firm and a couple of others. What do you think about this this Valeant here? Are you dip buying this at all, or is this thing just continuing to piss down?
Well, I'll tell you, I had the call when it first came, before it even started going down, when Hillary Clinton was making that announcement about how she wants to go after some of the pharmaceutical companies. I got a call from one of my hedge friends. He's like, if you want to play this Hillary Clinton thing, choose VRX. This one's the most overinflated, bloated piece of shit that I know of. Yeah, and I remember it went down 9 points, and it bounced 4, and starts to roll over. So I was like, all right, I have, you know, my measly 100 shares of it, and then I'm up $1,000 on it. Next thing you know, I made 400 or 500, and then it rolled back over, went down another 10 into the close, and then the next day is when it went down 40
points,
with no explanation.
Yeah,
it was just more that Hillary Clinton just is going after some of these companies. And then as it broke that 180, 170, that's when we started hearing that it's a company-specific issue.
Right.
And, you know, then it went down, you know, 100 points in the next couple of days. I would not. I've learned my lesson over 15 years. When there's that much smoke, don't buy the dip, even though it might seem tempting. It's not worth it. You know, there's going to be sacrificial lambs like your Fitbit and your GoPro, by the way.
Oh, man, we're going to get into that right next to this one, man. So keep that one under wraps. Absolutely. So,
and your SUNEs.
Yeah, so Kenny, and I got Soon up here for us too. So Kenny is saying, you know, don't try to catch the knife here. Don't try to be a hero. You know, we see that with United States Steel. We see that with even big, large cap companies that are in the material space right now that are just getting crushed. You're talking about a lot of oils, a lot of energy stocks, a lot of material stocks, coal stocks, even the rails, you know, even some of the big rails here. All these things are just getting punked, absolutely punked, as they just rotate out of these names and throw cash at some better names. Let's just throw in Soon here. Let's just throw in Sun Edison here. You know, hedge funds are selling here at you know, Greenlight Capital, Lone Pine, Glenview, Third Point. You know, these guys are all just bailing out of this stock. Right. And Sun Edison here is trading what? It's trading. I think it halted today. I think it halted today at like 3 and change. Popped a little bit on the news, like 360, and now after hours you're looking at 290 again. Oh, yeah. And there was a huge bearish bet. Somebody bought 2.5 puts today I'm not sure what expiration, but they laid out like a $2 million bet on 2.5 puts.
Wow.
So, you know, there's plenty of people here. They're still going for moves on this, you know, down to $1, down to 50 cents. You know, you're sitting there trying to be the hero here. You know, you know what's going to end up happening is you're going to end up putting more capital to use, risking more than you should because you're trying to be the hero, because you're thinking, oh my God, you know, these companies can't go to nothing. And then boom, you know, that's where they end up going.
Right.
So Sun Edison is one. I mean, we were talking about Fitbit and GoPro. Like GoPro got a downgrade today to like $15
Yeah.
to $15. And this thing is trading what is she trading right now? $28. So this thing is getting its ass kicked. Fitbit, a lot of put buyers. We saw a lot of put buyers for January, all the way out to April. And this was when the stock was at 38, 37. And if you look at it now, it's trading around $28. I still think this thing goes down lower anyway.
Absolutely, the stock will not be around in 3 years. I mean, but here's why I love the market even more. Even though we've missed this monster move, the shitty stocks are still shitty.
Right.
That's showing me that this market is sort of rational. You know, you're getting your GMCR is popping today, but that's been a shitty stock. Your garbage is still garbage. Your BTUs, everybody thought was going to get squeezed. Your SUNEs, your Fitbits, your GoPros, your Ambers. The shit's staying shitty, and it's just to me that's showing that's a healthy market. It's when, you know, back in July when we had that AQXP and you had a couple of these bullshit $3 stocks that went to 50 and then crashed back down. That's a sign of a top. This is a sign of a healthy market. You don't have the shitty stocks ripping out of control anymore. Reality set in, and you know, it is a very select few stocks that are trending higher all the time.
Right.
How the hell do you go short the market in particular? There'll be, you know, there's 10% of stocks that still suck. Like you said, the U.S. Steel can't get out of its own way, and you know, a handful of that stuff. But you know, that's why I've been playing the Qs. They seem invincible.
Yeah, so let's roll that in there. What are the stocks that they're moving into? I mean, take a look at Netflix, guys. For the past 3 days, Netflix has put in a ridiculous move. And again, when that SPY had that one panic day, or when the indexes had that one panic day last week, I believe it was Friday. I think it was Friday, or I think it was Thursday. When we had that one panic day, that's when they really just gutted. Like Amazon, we saw down 30 points. Netflix, we saw down like 5 or 6 points. Literally, the Monday, I think it was Monday. Yeah, it was Monday. Netflix basically just made a V-shaped recovery. And anytime you see those types of V-shaped recoveries in stocks like this, like that's when you know there's gonna be further highs. There's gonna be further highs. And Netflix, we see all the way back up to 121 when shit was trading literally at $101. This was Monday. You know, so for Netflix to move 20 points in 2 days, like there's a lot of shorts here. There's a lot of shorts getting squeezed. A lot of new money trying to come back in for the for the inevitable all-time highs. And I think we're seeing the same thing on the Qs. We're seeing the same thing on the Qs. We're seeing the same thing on names like Facebook. Where Facebook could end up running to all-time highs as well, which actually, why the fuck we even beat around the bush? It will go to all-time highs. Right. And a lot of these names will go to all-time highs. Qs will go to all-time highs, and we'll see that further rotation. So what else are they gunning for? What else are they gunning for that you're noticing? I'm liking Visa and MasterCard. You know, those are two names, too, that I saw a lot of call buying on today as well. What else are they going for, man? Obviously, you got the Google, you got the Amazon.
Yeah, well, that's why I stick with the Qs, because you're getting all the, you're getting the best of all that all in one stock.
Yeah, absolutely.
I'm looking at stocks. I like stocks like not GoPro in particular, but stocks that have gotten their asses kicked that try to stabilize, and then if they can hang into either a VWAP on the daily or even on a 5-day chart or a 10-day chart, once they stop going down, the shorts they gotta panic, because like, stop going down. I guess it's gonna go up 20%, just like GMCR is doing right now.
Right.
Even in the shitty stocks, they all have their day in the sun. And GoPro will probably go to 15, and you never know. This thing could pop right back to 25 on a vicious short squeeze. You know, one or two catalysts.
Right, which we're seeing in Green Mountain. We're seeing that in Green Mountain right here. This is a name that has been, you know, really beaten to shit, you know, in the recent days, recent months actually. What was she trading? $9, $90, 60 months ago, or sorry, 6 months ago. And now we're trading 41, and what? We're getting this crazy short squeeze after hours here. She's trading up to about 49 right now. So eventually, yeah, you know, these things got to calm down. I mean, even you see bounces, even you see those short squeeze bounces in United States Steel. You remember when that thing bounced from what, 14 to like 22? And now it's trading a freaking $9 handle. So you're going to see some aggressive short squeezes all the way down on a lot of these things. One sector to watch out for, and I don't know if you've been paying attention to any of this, but the retailers. And again, I think that's why the Amazon model just works so well. But if you take a look at names like Macys, like Macys looks like a complete ass crack. Like Macys 6 months ago was trading 72.5. Now you're looking at this thing about $37.
Holy shit.
$37. And this is Macys, you know what I mean? So anytime you're going to get like depressed stock prices like this with a name like Macys, who's got what? Who's got real estate, they got a lot of different business lines, you know, a lot of shit is going to happen within the whole retail sector as these companies start realizing like they need to spend money on, you know, the online sort of, you know, the way of going about things. And if they can't adapt, so names like Coach, names like Macys, names like, you know, all of these things, Abercrombie, I think is doing a better job. But, you know, a lot of these names here are destined for hell here. Nordstrom is another one. You know, these things are, unless they continue to, you know, change their sort of business model, you know, you might see some pretty nasty trading in some of these retailers too.
You know what? You're bringing a point that I was going to bring up is that if you go looking for ideas, you know, looking for stocks, I'm not finding stock, and even on a day like this, there was a few things that were trending all day. But to me, the internals, it doesn't seem like this market is as strong as it is when you look at a 250-point day on the Dow and a 90-point day on the Nasdaq. It doesn't feel like that.
Yes, and that's the mysterious disguising thing about this market. And by the way, that's what's pissing off a lot of traders too. I was in New York just recently, right? And I'm talking to a lot of different traders. And, you know, we are usually the guys that just love the volatility. We love it. We love it. We love the volatility. But for some reason, like it's always a little bit different. When it comes around, you're just like, yeah, next time that volatility comes around, I'm going to freaking smoke it hard. And I'm going to get all up in there and I'm going to make millions. And then when it comes around, it's always just a little bit different. This one in particular, yeah, it's a lot different. It is a lot different.
Well, one thing about the market in particular is that now we officially got everything thrown at it all in one day. We had a sell-off. We had the idea that the market might have topped out. We had the interest rates about, you know, finally we're agreeing that they're finally going to get raised. And then we had terrorism attack. And we still couldn't go down.
Yeah, yeah, and guys, you know what? Let's throw that out there. The ES was trading after Friday. Okay, now this was last Friday when the news came out from Paris. News came out around 5 o'clock, right? We get this big terrorist attack. ES traded down 15 handles. The Sunday when we opened back up, we traded down 15 handles, and subsequently from that low, all right, you're talking about a SPY trading at around like 200.5, somewhere around 200, right? So from that ES low, we're back here. You know what I mean? Like we're 80 handles from where we were off of that news from the you know, from the terrorism attacks and everything. And that was from that big Friday sell-off when finally Amazon looked like shit. When finally you know, Netflix dumped 6 or 7 points. When finally all these other names just kind of pulled back. Bank of America looked like it was going to open up on Monday at like 16.5. You know, it looked like they were throwing all these names to the wayside, and it was panic fucking central. And then Monday, as soon as we opened up, we literally opened up flat. We opened up flat, fucked around for a little bit, and then boom, you know, next couple of days. I mean, look where we are now. We're almost at 209. Right. That's how quick this shit is happening right now. You know, and if you don't grab your balls and even chase this shit, all right, or if you get stuck to a bias, let's say you got stuck on a short bias, guess what? Not only did you get fucking punked, you missed the entire opportunity here. You know, and you're left kind of with nothing. So that's how quick and difficult this volatility is. you know, this time around. I don't know, Kenny. What do you think, man?
No, man, you nailed it. I thought the Qs were going to pull back to the Google Amazon breakout level,
Right, right,
which made complete sense. We blasted off from 109, and I don't watch these spies like you do. I'm more of the QQQ guy. So if you look on your charts, you'll see when the Google we were struggling. We were making a nice comeback. We couldn't break that 108.80 area, 109.50. But then when the Google Amazon numbers came out, whack, we went right to 111 on the gap, and we ripped all the way to 115, and that's when we finally had our little sell-off. So I'm thinking, all right, let's close that gap and get down to it. So that Friday we were selling and selling and selling. We got down to 1107, which was an area that of concern to me. Once we broke 1107, I'm thinking, oh man, this market's going to get hammered into the close here. We went down to 110, terrorist attacks. Broke 110. I sold the rest of my Qs at 109.80. They were 108.80. So we're below we were into the Google area already now. So I'm thinking, all right, even if the market, you know, stabilizes, because it's at least it's not our country that got bombed and we've been shaking off everything in sight. We'll probably open up maybe, you know, I figured we open up around 109. When we opened up, you know, basically flat, I just waited for the UVXY and the VIX to show me the light, because if we were gonna sell off Monday, the VIX would have been spiking higher, and it was just getting hammered. I mean, it was going down in point increments at one point. I was like, I guess we're never going down ever. I mean,
All right, guys. So to switch up topics here a little bit, let's throw in a little fun here, and then we'll end up with some questions here from Twitter. Again, and guys, interact with us on Twitter. And actually, this is a question that I would love to hear your opinions on Twitter. New York has recently shut down FanDuel and recently shut down DraftKings. FanDuel actually agreed. I think DraftKings, you can still use it. FanDuel agreed to pull out of New York or stop taking new deposits. So basically, guys, these are the quick one-game gambling sites for for your football games. And they're basically saying, I think the AG is saying state constitution prohibits bookmaking and gambling, and that daily fantasy sport contests are plainly illegal. And they've actually exploited like a little loophole, and they're saying that fantasy sport contests are games of skill and expressly exempted from federal law prohibiting online gambling. Do you guys agree with this? And by the way, the Massachusetts governor came out, used the app, like as soon as as soon as all this New York shit started happening. The Massachusetts governor used the app, was like, yo, this shit is great, man. Like, I don't have any problems with this. So it's a statewide thing. New York is the first one to drop the ball. Like, what do you think about this? Number one, are you a gambling man for the football? It's like, I got a bookie. I don't use the one game type stuff, but I used the app the other day. It's fucking sweet, man. It's sweet.
Well, obviously it was just a bizarre, moment of judicial history in America, how they were able to dupe the powers that be, convincing anybody that that's not gambling.
That's not gambling. I agree 100%. And that's genius. And the backers behind this shit, I mean, you're talking about Bobby Kraft, you're talking about Jerry Jones, you're talking about, big hitters here that are backing this whole thing, somehow able to convince or able to just slide under the radar like that and say, yo, this shit is not gambling. Like, that is nuts, man. That is nuts.
It's amazing. But the thing is, it's not going to go away. They needed some regulation, and they will regulate it, and then it'll be back full force. Everybody loves it. I can understand why they're saying it's not gambling, because you're not betting on the team in particular, but it's worse than that. I mean, you're betting on every individual player as a collective. I'm like, there's no skill involved. And then you're fighting against algos. There's these, I read about this team of Chinese guys where they build algos to, build their teams for them based on the price of the team and how much it costs and what the player. I mean, how are you going to fight an algo, just like trading? How are you going to fight an algo? And this guy, Joe Schmo, my son is sitting there. Oh yeah, this guy did well last week. Maybe he'll have a good week next week. I'll put him in.
Yep.
How you gonna? My son's never going to win any money against these guys that are, building their teams based on algorithms.
Yep.
But, and then obviously somebody was able to, forge a team after the fact and win all the money. I don't even know the whole story, but it's you know, once it's legalized, or not legalized, once it's regulated and they have some sort of you know.
But that's the thing. I mean, the same thing happened with online poker, though, and that shit's still not legal, man. And how is that not considered a skill game when you're talking about poker, right? Is it all pure? You know what I mean? Like a lot of people would say, you know, poker is a skill game. And
Right.
then what about trading? What about trading? Like trading, are we going to go as far as to say trading is straight up gambling? Like, let's put it out there on Twitter right now. Do you think trading is gambling? Do you think investing in the markets is gambling? I personally say at the root of it, fuck yeah, man. It is gambling. It is gambling. Absolutely. But when you have this conversation with people on the street or other people who trade the markets, they're like, nah, man, it's not gambling. You know, value investing is not gambling. Like, I did the research, I should get paid for it. No, motherfucker, no. No, I personally don't think so. What do you think?
From 1950 to 1975, the market was based on fundamentals where you could actually crunch your balance sheet and your EBITDA and earnings per share and feel comfortable about what the company does. And I think I'm getting a fair price buying the stock here. And if they continue on this path of exponential growth, that the stock should be valued at X in a given amount of time. That doesn't exist anymore, especially with biotech stocks where, you know, you got a biotech stock and it goes from $20 to $200 on hype. Then their drug gets approved and everybody's wondering, how come the stock's going down? It's because now you could put a value on it because, all right, now their drug's approved. How much are they going to make? Now you could actually evaluate it and it goes down. It just proves that the market is just, it's all speculation, short squeezes, and fear and greed. It really all comes down to, did we trap enough shorts 2 days ago? Let's kick their fucking asses and run half the market. I'm thinking the market was going to be up today anyway, but let's say it would have been up 100 because people got short yesterday. It was up 250 today.
Yeah, light volume and light liquidity markets are apt for this kind of activity. And, you know, if 2 days you can rope in enough shorts here to have a monumental 1 day or 2 day squeeze, you know, that's exactly what Kenny is talking about here, guys. So when you have a very illiquid sort of market, at least much more so than before, it's very easy to run through all these levels, which again is why I make the case that, you know, your technical analysis stuff really doesn't matter. And on that point, we had some news here from the NYSE to eliminate stop orders. Did you hear about this? So they're saying they're not going to be able to make stop orders and good till cancel orders from February 26th on, and they're saying they want to reduce risks during choppy trading. I think there's a little conspiracy kind of thing behind this, and they're saying they're kind of also stopping a lot of the HFT activity to go towards the NYSE because, you know, they gun for all these stop orders, you know, so maybe that's kind of a reverse way to attract more volume to the NYSE. I don't know. What do you think about that?
I'm not too sure. How could they outlaw a stop order? I mean, that's part of
trading. Yeah, that's part of, you know,
part of everything. I mean, if you own a stock for 12 years and you say, all right, well, now that stock's at 50, let me put a stop in at 49 because I'm pretty happy if I sell it at 49. How could they stop? How could they tell you not to do that?
Right. I don't know. They're saying so all existing GTC orders and stop orders that are resting on the NYSE book will just be canceled. They're going to just fucking cancel these things. And remember, that's just on the NYSE exchange. So you're still going to be able to put a stop loss on, you know, on the Nasdaq. You're still going to be able to put a stop loss on an ECN. You're still going to be able to put a stop loss on, you know, another exchange here. Right, so the NYSE book is just disallowing this, and it's going to be interesting to see if they can either attract more volume or maybe they piss off some HFT. I don't know what the end game there is there. So guys, let us know on Twitter what you think about this, about the NYSE effectively dumping here the stop loss orders. All right, so let's go to next topic here. Let's talk about FOMC. Obviously, the minutes came out today. Everybody and their mothers are talking about this this possible rate hike here in December. I think the comments here, they're saying, let's see, what do we got? In its post-meeting statement, rather than framing its near-term policy, committee decided to indicate that in determining whether it would be appropriate to raise the target range at its next meeting. It would assess both realized and expected progress. So basically, they just want to see employment figures. They want to see inflation figures and things like that. So they want to make sure they're going towards maximum employment and low inflation here before they go ahead and raise the rate. So they didn't effectively say no, they don't want to do it. But again, they pushed it off to the next meeting and the next meeting and the next motherfucking meeting. Like, how long has this been going on, man? How long has this been going on? And I think the way that the banks are trading, everybody is starting to price in, like, hey, if this happens, we want to make sure we're in these banks.
Right. I still don't think they're going to do it by the end of the year. Why? You got 42 more days to go, or whatever. How many days left in the year? 52 days or whatever. However, why do it now? Just let the year do what it's got to do, and then let's reevaluate in January. And you know what? It's not even the first interest rate hike. It's after that.
Yeah.
What's the policy going to be? Are we going to be on a steady increase?
Or is it just going to be one and done? Exactly.
Right. If it's a one and done, who cares? Even if you raise a 25 basis point raise means absolutely nothing. Like everything else. I mean, and again, all economic data means nothing in a runaway bull market. News does not matter. Economic news. The only thing that matters is geopolitical strife, because something big enough happens again.
Right.
That'll derail this insane bull market that has been, implemented by the United States government.
Right. And it'll inject a little panic. And anytime you see panic, I mean, that's what we saw in August. I mean, you guys do got to realize, like, you're talking about serious redemptions from a lot of mutual funds that had to close shop. Like, they had to close shop. Because again, these people everybody is over levered. You have that big washout to really crush that money. And you're talking about a massive transference of wealth here. All right. A massive transference of freaking wealth where some of the top known funds here just got completely washed out. Okay. We're talking about billions of dollars here. And now the market is right back, or market hasn't gone anywhere. The market has not gone anywhere since since that August calamity here. So, hopefully you were a part of receiving, that massive transference of wealth. If not, that's what those situations are for. So anytime, you get that kind of panic situation, that's where the real opportunity as a trader is. But subsequently, it's also the real risk as a trader. You know what I mean? So you could end up losing all your cash, or you could end up, making a name for yourself during those periods and times. All right. And there's that same expression. What is it? Capitalize on the chaos. You know what I mean? I mean, that's what we do, baby. That's what we did. I mean, I made a name for myself during the 2007 crash. That's where I staked my claim and made a name for myself as a trader. You know what I mean? I was shorting the piss out of everything, and then monster buying all these dips. And that's where I made a name for myself. Now, has there been opportunities to do that again and again and again, and as the years have gone by? Absolutely. And plenty of traders are making their names for themselves during shit like that. And we're talking about just 2 days. We're talking about just 2 weeks that can change, your whole life, right? And change everything that you've been doing up until that point.
Yep, it's incredible how much we do move after these monster sell-offs, and they get it all out at once, and then we rip it all the way back. But to one of your points, talking about buying the dips. If you have something like, let's put my dad into the mix again. When the market was crashing in 09, he was like, we get to buy GE at $7.50. They're not going out of business.
Yep.
Let's buy it here and wait 10 years. I'm like, you got 10 years to wait. Go ahead and do it. He still has his GE from that day.
He still got a GE, and if you look at GE, is the most. It's like you have to be in GE. So if you're gonna have a portfolio now, you have to move into GE. You have to move back into GE. Like, GE is trading so well, even during the pullbacks. GE is trading so well. Yeah. It's trading almost up to like $31 here, and this is easily 52-week highs or multi-year highs.
We're at the 5-year high now, I think.
Yeah, we are. We had a 5-year high.
For us as quote unquote day traders, and this is the kind of day where I was talking about it I was like, after we got through the chop of the morning, I was like, this looks like it's going to be one of those grind up days where no matter what trade you put on, you're going to feel uncomfortable about buying it because you're going to be the high of the day. The stock's going to pull back for 20 minutes and then rip back, rip back in a minute. And that's how I tell whether or not this is a bullish day or a bull market. If it takes 40 minutes for your stock to grind down 20 cents on a pullback, and 15 seconds, it makes the 20 seconds back, we're in a bull market. Just buy some stocks. Yeah, you're going to be the high of the day. I did it with the CRE. I did it with the FEYE. I did it with the, what was the other stupid stock we held all day? What was it, Halliburton maybe? And we just sat with it. And I was like, every time it pulls back, it looks like, oh, I just topped the market out. I just topped the stock out. I just top ticked it. No. It takes 20 minutes to pull back 10 cents. And then in 3 seconds, it's back up to 20 cents. You just got to just sit and just stay long. And it's a difficult market to be a day trader in because, you don't know when to get in. And especially when we had the Qs, I'm suggesting to guys, I'm like, oh, look, the Qs are, 112.50. Let's sell some. And then they go to 112.70. I'm like, and then they start pulling back. And then the FOMC minutes come out. I'm like, why are we breaking out? I'm like, I don't know, because I guess we're done with the meeting. So the meeting's over. It doesn't even matter what they said. All right, that's another thing we don't have to worry about. Whatever, blah, blah, blah.
Yeah.
If we break 120, 112.70, we're probably going to go to 113. So I'm like, all right, cool. We're at 113. We had a little trouble there. So I sold it again. And next thing you know, we're blasting off again. I'm like, you know what? Fuck this. Don't ever sell. You can't sell. You don't know when to buy. You don't know what to sell. You got to be like a 3-day trader, more or less. An intermediate swing trader until that stops working.
Yeah, catch those reversals. Catch those reversals.
Yeah.
Stay generally with that long bias. Wait for some of that panic to come in, and try to juice it. The problem is that buying the panic at those points, they're able to make it look so bad there that you don't want to buy. And that bias also sets in there as well. Subsequently, you get short bias. And that's when, shitty things start happening in this particular market. At some point, it will change. It will change. And, we'll be able to get, some stocks that are just in bearish territory. But until that happens, guys, I mean, you know what the deal is. You know what the deal is. All right, man. So let's wrap it up. Let's give them some of the best trade ideas that we got, that we're currently working on. Me personally, I love AIG long. And again, these are all swing trades from me right now, because I don't, I'm not really intraday messing around like that, because this market is just wild. I'll trade the ES intraday, and then everything else, like I'm just swinging. So I love the AIG to go fresh all-time high, so 65, 66. Love the Bank of America, man. I'm betting some big cash on that if it finally breaks 18. I like the Gilead too. I like the way the Gilead is trading, and I think you get 110. I think you go 110 plus very soon, and I like the Baidu too. Baidu to hit 210 next week. I think that'll happen next week, man. What do you got?
I'm obviously going to be playing GMCR tomorrow. We're really going to see whether or not this stock has found a true bottom. But
yeah, guys, Kenny loves to play the gap retrace kind of trade, So GMCR could be a huge one. There's a gap. It looks like from $50. Back in beginning of the month here. So maybe you get a retrace into that, but this thing is going to be juicy tomorrow, no doubt.
Yeah, if it gets over the 40, this right here, I mean, we're at 48.80 in the aftermarket. They're probably going to gap it up even more. So usually if it's gapped up this much, they'll even tack on more.
Yep.
But if this thing breaks over 49.50, they could just, you could tack on another 6 points. And then if the squeeze, I mean, again, it's so difficult, even though I hate this stock and I've been talking about how the microbes and how Coke made a bad investment. I would have been rich at this point. I was short GMCR. I had the 120 puts, what is it, a year and a half ago, and the stock was halted because the numbers were bad. But then Coke comes along and says, "Oh, we're buying part of the company," and I lost my all the money on the puts. And next thing you know, it's down 100 points since that day. But I'll be definitely trading this GMCR. I am looking at really, really shitty stocks like Credence.
Wow. I haven't heard that name in a long time, man. What is going on with this thing?
I liked it because it looked like it was bottoming out, and then it got downgraded. But of course, when an analyst downgrades a stock and it goes down 250, to me, that's okay. I gotta buy some here because analysts know shit. I mean, where were you? How come you weren't downgrading it at $85? You know, downgrade it now at a 5-year low. Let me buy some more. So it bounced the past couple of days. I still got the CRE. I'm in pot for the first time.
Oh, you're in Potizzy. This is what we used to. We used to call this stock Potizzy for Rizzy, man. And back in 2007, Potash, CF, and Mosaic, like these were the high flying stocks. These were the names that you had to own if you had a fund, if you had a an aggressive portfolio or whatever it was. Like Potash, I remember trading at 100. I remember this thing split 3 times and went back to 200 every time. Like now, this is the only time where this thing just can't do it. By the way, Kenny, I saw a lot of call activity on this one too, actually recently. So I don't know. You're going for the short squeeze, I had imagined, correct?
Yeah, I'm just looking for it to stabilize down here between that 1980 and 21 area. It got to the breakout point to the penny and still breakout around 22.38. So I'm really in some shitty stocks, and what I've been doing is I'm just buying a little bit. As long as they don't break all the way down, I got the Joy Global, I got the FEYE, I got the CRE, I got the POT, I got what was the other shitty stock that I was in? I just recently got out of one of them, but I bought the shit out of Alcoa, $785. That was my price, so that's my biggest position right now. I'm looking to make another, maybe they get this thing to 850 again. I'm probably gonna start unloading it, but I'm definitely gonna be trading this GMCR because I'm still not convinced. This could be a 20% move up here, but you know what? Reality might set in tomorrow, and they'll tank this thing down another 250, and we'll see how it opens up and how it reacts. But I'm really just looking to lock up some money in these QQQ puts. I don't think we're going down for the 20th of 2017. I made this call when the Qs were at $60, and we're right there. I mean,
you should redub yourself James Altucher, man. That motherfucker. You remember when he made that Dow 20,000 call when Dow was at like 14K or something like that? I think he was like a couple years off, but he was pretty on point. You should be on TV now, bro.
I think we're going. Oh, I coined the Dow 20,000 before he did. I was making videos when the market was, when we finally started rallying, we went up for a year straight. I'm like, you know what? We're gonna go right to 14,000. And then we'll be at 20,000 by 2017, 2018. I'm right on target. I thought.
So why didn't you just buy and fucking disappear? How come we can't do it? Let's talk about that for a second. Let's say you make one of these what seems to be asinine calls, right? How come we don't throw that money? How come we don't just throw that money in there? When we have such a bold call, is it that bold that we ourselves can't even fucking believe it? And we just want to put it out there for other people to believe? What the fuck is that about?
We want to be liquid also. And it's the same reason. Like, I don't think there was anybody who liked Tesla more than me. Everything about this stock, everything about the company, let me say, I loved. I was like, this guy's going to change the world. I was a big fan of Elon Musk. And I owned that stock. I had 1,000 shares at like $28, $29. And man, I just sat with it I gotta be a year and a half.
I remember when this shit was trading 26 fucking bucks, bro.
Yeah, Motor Trend was saying how this is probably the best car they've ever seen. I'm like, all right, this stock has to pop. Then it finally goes to 35. After waiting, you make 7 points. And then somebody puts a $60 price tag on it, and the stock went up 10 points that day. And I'm like, all right, here we go, finally. So then the stock's at like, I think it was at $48, maybe 51, and they were reporting their earnings. I was like, all right, you know what? I don't want to hold it into this earnings report. I held the stock for so long, even though I think this is going to be I thought it was going to be a $500 stock when it was at $28. Maybe I was going to give it 10 years. But then, you know what? An earnings report comes along, and I'm like, maybe I should sell it into this earnings report, and I'll just buy it back the next day. Stock went up 16 points. I never bought it back, and here we are. That's why we sell, because there's always a reason to sell. You need the money. You think the stock's done going up. You want to be liquid. You think you got a better idea. There's a million reasons to sell, and then you look back and like, if I had just held on. But then you look, the way to not go insane, people, is look at the stocks where you thought the same thing that went to zero, like Walter Energy, like MCP, like US Steel, like Alcoa, like you know, I thought US Steel was going to be back to $75 by now, you know, a year and a half ago. And here we are at 9. So you got to remember, there's those shitty calls that you made that thank God you sold. You know, thank God. I mean, I could suck Alcoa. I was loving the Alcoa. I mean, anybody talk to me.
Oh, no, I know. Your favorite fucking stock in the world was always.
Because they were changing the company. I didn't care that the commodities slowed down. They were getting into different things. They were revamping the company. I was like, they were becoming this juggernaut. I was in the stock from $8 all the way to 17. I'm like, and
you see how much, you know what they said in the in most of the religious books out there, right? I think it's in the Quran. I think it's in the Gita, right? The Bhagavad Gita. There's the Hindu book. And it's not really a Bible per se. It's just kind of a way of life. They say the source of man's what is it? The source of man's most or uncomfort, right? Discomfort. The source of man's most discomfort comes from emotional attachment, or comes from attachment in general. Like, did you guys see how Kenny was so passionate about talking about his fucking Alcoa? This is what happens to most traders, right? And this is what HFT has figured out. It has figured out so well, right? It's the fact that we get biased. We get attached to everything that we touch. We get attached to the money that we throw around, obviously, because we're gambling. We expect a return, or we expect to see, you know, a loss, or whatever the hell it is, right? We expect to be right, whatever it is, you know, that attachment that we have, it causes us to be gun shy. It causes us to be greedy. It causes us to be this, that, or whatever. And without that, at an extreme amount, we don't have a fucking market. We don't have a market. Imagine if it was all HFT, right? And there was none of us around, nobody doing value investing or any of that stuff. I think it would be a much more ridiculous sort of world, in the sense that you wouldn't see all these big price fluctuations, all these giant, massive short squeezes and things like that. So it's an interesting thing to talk about. And I think it'll be talked about for the next, you know, 10, 20 years, possibly even 50 years, until magically, you know, the stock markets just transform into this new kind of world, which who knows where it can be. But I'll tell you what, the algorithms and high frequency traders, you know, they did a great job getting in, predicting the way things were going to go, and predicting the best way to trade, you know, the future of the market here. And that's why, you know, these guys are able to kick ass, like Virtu Financial here, not, you know, only having 2 losing days in 5 motherfucking years. Like, what trader do you know that has been able to pull that shit off? You can't. You physically cannot. It's about numbers. It's about statistics. It's about taking the bias out of the equation. It's about saying, who the hell cares? It's just a probability trade, you know, and having the cash and capital to be able to do that. So honestly, I think, you know, in closing here, I think we can say that there's going to be a new wave of the retail trader. Like, you know, the definition of guys like myself and Kenny, it has to change. It has to change somewhere along the line, you know, because most people are just getting dumped to the wayside left and right. Kenny, what do you think, man? What's the evolution of guys like you and me? You know, what do we incorporate a little a different school of thought? Do we, you know, what's the evolution here?
Well, my evolution is actually, I'm in the process of evolving right now, because instead of me building an algo or building you know, an alert and sitting here just doing it myself, I got a decent thing that works with the VWAP and the reversals. They work pretty well.
Yeah. Now, are you able to keep yourself to that strategy though?
Well, there's always going to be that
deviation, right? That deviation. Okay.
And I'm going to try not to deviate, but because what happens is I'll miss some other reversals because there's too many. Every once in a while, there's just too many to choose from. So now I'm going to have my alert system just spit out the specific setup that I look for, and I'm going to be yelling it out to my guys. I'm building like a small little desk, and we're just going to trade only those ideas and have like a collective, like the org of trading, and see how that works out.
Cool.
But the evolution is, I think we're all just going to be algos at one point, right?
All right.
You know what you want. And then until the algo stops working, you let it run, and then you tweak it and
So that leads to the question here that we'll post on Twitter, and anybody who watches this video later on. That leads to the point where that if everybody goes algo, right? Let's say everybody does go algo. Everybody just has like this little strategy they perfected, and they're just going to do that in the marketplace. What happens in the marketplace to fuck that whole trade up? What happens? Because inevitably that always will happen. That inevitably that always will. That's the nature of the markets that we live in, right? A trade or a whole system of trades just gets busted in one fell swoop. What is that going to be? And it's always going to be something. Who knows what it's going to be, but that's the way you guys got to start thinking out there. So if you're a retail trader that is just churning right now, or, just can't figure out what strategy works for him or her, this is kind of how you need to think. You can't come into the markets every day and just expect to trade something and make money. It's too much of a back and forth kind of thing. There's no longevity in that. You got to focus and drill down into something that you can tangibly do day in and day out, or not do if the situation is not present. So you literally have to become somewhat of an algorithm in this type of market, because you can't handle all these kind of different strategies or different trades at one time. So think about that. Think about that as a retail trader. What is your evolution? What do you need to do in order to consistently make money every single day? And granted, this is the same question we've been asking ourselves, for 10 years, 20 years, but there's always a derivation of it. There's always a different way to go about it. There's always a, kind of the new thing and the new way to go about it. And I think me and Kenny just kind of hit on that one. So dude, leave them with some last words here, and then we'll pick up next Wednesday, bro.
I'll tell you, part of the evolution is knowing, like today, what worked today is probably not going to work tomorrow. Maybe your algo, the VWAP reversals will probably work tomorrow, but the idea of just buying something at 940 and selling it at 359 probably not going to work tomorrow. So you got
definitely not going to work tomorrow.
Got to be on your toes. And I wanted to say something which is pretty ironic. I was talking about how I love this market because you're not seeing any psychopathic biotech stock going up to 600%. KBIO.
KBIO. What are people talking about? They're talking about that after hours. What the hell is that? What's going on?
Went from 2 to 15.
Shut up.
Yeah, it's pretty ironic how it's just.
Shut up. So this is a pharma company. So clearly pharma is not dead. Guys, take a look at KBIO. I don't know what the news is, but holy shit. Just the fact that shit like that can actually happen. Like, guys, this thing was trading 2 days ago at a low of 44 cents.
Right. Yeah, so maybe we just top the market up. Bull market's over, everybody. Sound the horns. I love people that, YouTube people that always yell at me when I say the market never goes down. Obviously, the market goes down every once in a while. What I'm saying is I still think we've got another 400-something days left of this market, and
no doubt,
maybe even more so, because none of it's real.
None of it's real.
I just got to go back to the first thing we talked about, the China slowdown.
Yeah. So
the China was slowing down, China was crashing, but within 3 days, China recovered and is now back to being great. That's impossible.
Amazing.
It's impossible for an economic juggernaut to have a slowdown and a recovery and a expansion all in 3 weeks.
And you know what pisses me off is that there's no narrative like guys like you and me that are there to produce sort of an even keel in the whole marketplace. So for you go on CNBC, like that's the narrative that's getting pushed out there. You go on Bloomberg, that's the narrative that's being pushed out there. You go to Business Insider, everywhere you go, that's what's being pushed onto your plate. There's no guys like Kenny or myself who know a considerable amount about the markets, who've been trading a considerable amount of time, and who just understand how these things work themselves into the markets from a price action perspective or breadth perspective, whatever you want to look at. And there's none of that narrative that is like, that is leveling the field. You know what I'm saying? So I think that really sucks, because you get a whole world of people that are just buying into this shit, and they subsequently become the fodder for what the real move is. And the real move is there ain't nothing wrong with fucking China. There's nothing wrong with this market. Buy the shit out of this stuff. You're gonna lose your ass if you end up short and into this stuff, and it sucks. It really sucks to know that.
So
Maybe one day, man. Maybe one day, man. It's in the cards for me and you, you know, to get on the biggest stage and provide this kind of narrative, which, you know, God knows we would all love to. So everybody interacting out there on Twitter, man, you know, just keep interacting, keep talking to us. We
got to build our own stage, and then we'll have people come see us. You know, that's the way out. You know, we're on to something here. You know, there's nobody more real than the Jew and the brown man. So you know, we might not be the greatest traders in the world, but we do know what the hell we're talking about.
Indeed.
My problem is, you know, I dollar cost average. I buy a couple of hundred more shares, and the stock goes up 2 points. I'm sitting there like this. Awesome. This is the dumbest $200 I've ever made in my life.
Yep.
Just like, I mean, like all the bashers. And guys, if you want to bash me, this is for you guys on Stock Twits and Twitter. When I was bashing you and making fun of your GoPro at $90 a share, you could throw it back into my face and say, "Oh yeah, dickhead, you short at 90? Are you still short?" I might have been right, but what did I do? I think the most I made on it was the short from maybe 60 to 40.
Yeah, I caught that same one. I caught that same exact one, man.
But you know, you could everybody's a genius on Stock Twits, and all I ever do is I try to lend some common sense. If your stock's not, like on a day like this, if your stock didn't rally today, you kind of got a shitty stock on your hands. If your stock seems to go down 4 out of 5 days a week, maybe you should think about selling it. Stop saying, they're just shaking the weak hands out. They're just manipulating it down. It's the market makers out to get us. No, you got a shitty stock. Admit it. Pull the Band-Aid off. Buy yourself one of the good ones that freaking go up every day. Get yourself some Qs and enjoy the bull market. Because how many people, you got the Amrins and the SUNEs, and you just want to, I just say, you know, if it breaks 17, it's probably going to go right back down to 10. Fuck off. You don't know what you're talking about. I love when I'm called a paid basher. If only somebody would pay me to go on Twitter to badmouth a stock. Spoken like a paid basher. Shut up and keep your comments to yourself. Okay, dickhead, your stock's down another 70% in 2 weeks. I was just trying to help. Fuck off.
Indeed. All right, guys. So listen, we're gonna cut it out here. Make sure, just keep interacting with us on Twitter. At some point, maybe we'll even take donations or something, where we can get this kind of on a bigger scale. Kenny and I are in talks to kind of work on, you know, kind of a more studio, more polished type of product. And give us your comments. Just give us your feedback. You know, whatever you like about the show, whatever you think we could do better, whatever you think we could, you know, structure it, talk about. Whatever it is, you know, where we'd love to talk about it with you guys. All right, man. So we'll catch you next Wednesday, hopefully, for the Jew and the brown man. And if you didn't know, Kenny is the Jew and I am the brown man. I mean, just in case you didn't fucking know.
You know, we're the shiny.
If we could get along, maybe the Sunnis and the Shiites could get along.
All right, brother. Take care, man, and I'll happy trading out there, everybody.
Yo, if you guys want to contact me, if you guys want to learn a little bit about the VWAP, it's kennyglick@AOL.com. That's right. I still use AOL, motherfucker. That's right. All right? Deal with it.
Take care, everybody.
Later.